This video will show the difference between an expense and a bill that goes into AP. So we will just go to GravyBooks.com. We'll be logged in immediately to an accounting software where we can start creating some transactions. So an expense is something you buy and the immediately the money comes out of your bank account. So let's say we go to Walmart and we buy office supplies. So let's create that vendor, create a payment account, and we're going to use a debit card, office supplies item, which is just a non-inventory expense. We're on a brand new account here, so we're just quickly getting configured. So let's say we spend 30 bucks on office supplies at Walmart. And if we click into this expense in GravyBooks, it will show us the transaction related to this expense. If we look at the transaction, we can see that we credit the bank account $30, and that's explained by a debit of 30 in the expense account. So we expect to see on our bank statement or bank transactions from our bank that this $30 credit will come through. A bill, on the other hand, is something where your vendor kind of has more trust in you, and they send you an invoice, which you then create as a bill. And that invoice has payment terms, meaning you can pay it later. So let's say your landscape, your landscaping company sends you an invoice. Their bill will always have a number on it, so you know which number to pay, and then a description and an amount, and then you can configure your GL account that this expense hits. So we can also put this under expenses and create that bill. When we look into the bill and look at the transaction that it generated, we see that we actually credited accounts payable. So we have not hit our bank yet, and we are, but we did incur the expense on this day. And the power of this is that if I have multiple bills from a vendor, we can pay them all at once with one check. So let's say their April cleaning is also 100, and we create that bill. So now when we look in AP, we will have two outstanding bills for our Landscape Pros vendor. And when we pay the bill out of our bank account, we can pay one transaction to pay multiple bills. So when we post that payment and go look at our latest payment created, we can see what invoices we paid, and then the transaction there will show you that the $200 is eventually what hits your bank account, and we reduce our AP liability on those specific invoices. And then upon paying that bill, you would generate your remittance advice telling your vendor that this $200 payment is for these two invoices. So on their end, on their AR, they can mark those outgoing invoices as paid. So that's the difference between an expense and a bill in accounting.